Hi everybody, Alex Deploy here from Expert Forex, and in today's video we're going to be looking at success using the reverse martingale system. And this takes quite a bit of out-of-the-box thinking. Right, so over here is the traditional martingale principle, which says that if I bet 1 and I lose, I have to put 2 on the next bet to make up the one I've lost and to then create a profit on the next trade. If I lose that one, I have to bet 4 on my next trade so I can make up my losses and end up in a profit, and so on and so on. Now, the big disadvantage of martingale is that it can run out of control. As you can see, the numbers start getting really big very, very quickly, and that means you have to have a huge trading account to be able to use martingale principles. They are very, very dangerous because they will eat your account up and you will encounter a margin call or a blown account. So martingale is not something that you should be trading as it has been designed, but it does create a lot of ideas for forex traders. For instance, you don't have to follow that sequence. You can reduce the rate at which you increase your lots. So you can go a lot slower, it has less risk, and your account can stretch all that much further. For instance, the gaps between your transactions can vary. They can become smaller, they can become bigger. And your lot sizing can vary. You can increase your lot sizing and decrease your lot sizing. So martingale provides a great structure for really interesting loss recovery processes. Now, one of the biggest disadvantages is that this loss of control, where the process just doubles and doubles and doubles all the time and you actually lose control. So one of the things we looked at is how can we gain that control back? How can we limit the size of the trades that get traded? So one of the out-of-the-box ideas that came out of our group was, why don't we start at a much higher level and go the other way? So in other words, rather than starting at 1 and moving to 132, start at 16 and go the other way. Go smaller. That way you control the size of your transactions. Your transactions can never go higher. In this particular example, and this is just an example, in this example, your transactions can never go higher than 16. So you're in control, and because it's going down, your exposure is actually reducing. It's going the other way. You're not increasing your exposure, you're actually reducing your exposure. Now, many people that look at this think, oh my goodness, this will never work. And they do these mathematical calculations in their mind or even on pieces of paper. And they say this is impossible. But we live in an age where we can build these powerful robots and test these principles over 10 years back and say, do these principles work? So let's have a look at whether the reverse martingale principle works. Now, before that, this video is part of a whole series that looks at loss recovery processes, and we are in the process of reducing the disadvantages of loss recovery processes. For instance, what you're going to be seeing is we're pegging the maximum amount that the recovery process will ever open. So please go and watch these videos if you haven't done so. The links will be in the description and in the commentary of the videos, but these make up a lot of ideas about how to use loss recovery processes very, very profitably. They actually produce huge returns. Now, here's an example of testing this particular concept where you start high and you go lower. And as you can see in this particular block here, we've set 0.1 as the maximum lot size that we ever want to use. And that is, and if you click on size and sort it, that will show that the lot size never ever went higher than 0.1. And what were the results? And the results were quite nice. The other advantage of this approach is you don't need a massive account because you are controlling what's going on. And in this case, we are using a $2,000 account. It's not a 1 cent account. It's a normal $2,000 account. And over a period of 6 months, we have almost doubled our account with an income of that, and the drawdowns are actually very low. These numbers that get reported are absolute nonsense, because if you look at the equity charts, you cannot see $1,000 drawdown at all. There's the biggest drawdown, and that's only $200. So these numbers are absolutely nonsense. But it shows you also how smooth the equity charts are and how you can trade this with a much smaller account, because unfortunately the traditional martingale or loss recovery processes need huge accounts, and people then need to use 1 cent accounts. With this approach, you don't need it. You can use conventional accounts. You can also see the success rate is so much higher. And the other thing is, and if we go back to the previous slide, with Martingale, your first trade, you make a very small profit. With this reverse martingale, you actually make a huge profit. So you start cashing in huge amounts right up front. You build those reserves that will see you through if you have to go through a period of recovery. So this approach has a lot of pluses: smaller accounts, huge gains right up front, high success rate. Anyway, we are in the last phase of testing our loss recovery EA. It's called the Profit Retriever, and we are testing it on our Premium Advantage forum. There we are, EA trial, and there we are in phase 2, which actually started today. So if you want to take part in this trial, it's going to run for a week, and then that's it. We will be launching the EA accordingly. So please use this link if you want any further. So before I go, I just need to do this important disclaimer, and it's very important that you read this disclaimer. Please pause your video and read through it very carefully, because I want to make it clear that we, Expert Forex, provide Forex trading robots that are technically sound and reliable. But we cannot turn you into the most profitable trader in the world. You have to do that. And this is what the disclaimer is saying, is that if you buy one of our robots, don't for one moment think we have an obligation to make you the most successful trader. You have that obligation. It is your responsibility. So I hope you found this video interesting. And from me, Alex Deploy, cheerio.